NeuralTarot. When you look at the market, it can seem like just a lot of noise. But underneath it all, there are these hidden currents, these unseen patterns of belief and expectation that literally shape our financial reality. Today, we're going to decode one of its biggest mysteries.
So let's just jump right in with a question that honestly seems like it shouldn't even make sense. How is it possible for two companies with the exact same profits to be valued so completely differently by the market? It's a puzzle, and it really gets to the heart of what investing is all about.
To really get our heads around this, we've got to start on the surface with the numbers that everybody sees. This is where the story begins.
Okay, so check this out. We've got two companies here, A and B, and on paper they look like identical twins. Same $10 billion in revenue, same $2 billion in profit. But then you look at their market cap. The market says company B is worth $100 billion. That's more than 3 times what it thinks company A is worth. The numbers for today are the same, but the market's verdict? Wildly different. So what gives?
Well, the key to unlocking this whole thing is a term you've probably heard before: market capitalization. Now, this isn't about how much money a company has right now. It's the total price that the market, that's all of us, all the investors together, is willing to pay for the company. It's a collective bet, and that tells you everything. The market isn't just looking at today, it's pricing in something else entirely.
And that right there, that leads us to the deeper current. Because beyond the numbers you can find on a balance sheet, there's this powerful, unseen force moving things around: human expectation. This idea is not new. The famous investor Benjamin Graham absolutely nailed it decades ago. He said that in the short run, the market acts like a voting machine. It's basically a popularity contest, driven by belief and emotion, not some precise scale that's carefully weighing a company's actual worth. In that quote, it's the perfect way to understand the two sides of the coin here. The weighing machine is all about fundamental analysis. It's where you try to calculate a company's true intrinsic value based on its financial health. You're asking, what is this business actually worth? But the voting machine, that's technical analysis. It's not asking what a company is worth. It's asking what the crowd thinks it's worth, just by studying the patterns of buying and selling. Okay, so if the market is a voting machine, well, what makes people vote the way they do? It's not always about pure cold logic, right? It's about the messy, complex, and often irrational patterns of human psychology. The old school finance textbooks, they kind of assume we're all perfectly rational robots making logical decisions. But as this research shows, that idea just completely falls apart in the real world. Think about it. Panic selling, speculative bubbles, these things are driven by pure human emotion, not a calculator. And that's because our brains are just, well, they're wired with these little shortcuts, these biases that have a huge impact on our financial votes. We follow the herd. We're way more afraid of losing money than we are excited about gaining it. We get overconfident. We just assume that what happened yesterday is going to happen again tomorrow. These aren't just random mistakes. They are predictable, deeply human patterns.
And this isn't just a theory, You can literally see this emotional wave in the data. This is the VIX index, sometimes called the market's fear index. And just look at that massive spike in early 2020. That isn't a chart of a company's value changing overnight. It's a picture of collective human fear, a psychological force so powerful it can shake the entire global market. But it's not all about fear, right? Hope, belief, those are incredibly powerful forces too, especially when they're wrapped up in a great story. A perfect example right now is the whole narrative around an AI supercycle. It's this huge, compelling story about the future. And right now, investors are casting their votes based on that story, pushing some valuations way beyond what the current profits would justify. So let's pull all this together. On one hand, you have the hard, objective numbers of a business. And on the other, you have the very human, subjective story about its future. The market price is simply the point where those two things meet. And this table really just breaks it all down for us. You've got fundamental analysis, that's your weighing machine. It's about going deep into the data, trying to figure out what a company is really worth for the long term. And then you've got technical analysis, the voting machine. That's all about reading the crowd, looking at charts, and trying to figure out the right time to act in the short term. And this is where we get back to the heart of it all. If you really want to understand the market, you have to learn how to read the patterns that are created by both of these forces, logic and emotion, working together. So if you take away just one thing from all of this, let it be this simple but powerful idea.
The price of a stock isn't just about the present-day numbers. The price is the present numbers plus the future narrative, the collective story we all believe about what that company is going to become. Remember our two companies? Company A is being valued on its solid present, but Company B, it's being valued on a really compelling story about its future. And that huge difference in price, that's the market paying up for the story.
So, at the end of the day, the stock market isn't some giant calculator just coldly crunching numbers. It's more like a tarot reading, a system that's constantly reflecting our own collective hopes and fears about what's to come. And to understand what it's telling us, we have to learn to read the patterns of human expectation.
These patterns, they're everywhere, not just in the market. If you want to continue decoding the unseen forces that shape our world, subscribe to NeuralTarot. We'll see you next time.